Hello, ladies and gentlemen. Welcome back to my portfolio here. So this is the Dividend Dentist portfolio. We love talking about our dividends, what we've earned, how the portfolio is doing as a whole. So as of this recording, we are currently looking at $309,879. And so with this portfolio, I wanted to kind of break a few things down as of recent because I made a video talking about the highest point that this portfolio was at, which was $15,000 just a couple days ago. And I kind of broke down the overall portfolio, but I wanted to take a quick look and see which stock in this portfolio has been performing the best. Now, if you're a little bit newer to the channel, even though I am Dividend Dentist, this portfolio isn't super heavy focused on the dividends today. They're focused for the dividends in the future, which means I'm looking at companies that are increasing their dividends, looking at the companies that even maybe aren't paying the dividends and might in the future, or selling those companies to put that money into companies that will be paying a high dividend yield so I can live off of that money if I chose to, or utilize it for other means. Now, I've been investing in this portfolio since January of 2019, so it's definitely been a journey throughout this whole process, and it's really cool being able to share my investing journal, so to speak, right? Like, I just like to share with everybody like what I'm doing, what I'm up to, and so you can see here I started off pretty small, and then I started investing more and more as I started earning more. My main YouTube channel was starting to bring in a really good, healthy income that I was able to invest a lot more into this. Yes, this is actually a secondary channel or third channel, I guess you can say, but I just kind of do this on my side just so I can share with you guys and kind of just have this space for myself to kind of talk about things I love to talk about, which is dividends, investing, and having my money grow for me. So let's take a quick look here. I am using M1 Finance. If you're not familiar with it, that's the platform I'm currently using here. And so if we're going to want to look, there's two different ways we can see the best performing. Obviously, if we go into our holdings here, this is going to have our overall account. And you can see our unrealized gains. If I go ahead and toggle here, it's going to show us our best performing stock, which is going to be with Meta. So we're actually up $19,000 on this, and it went up about 158.43% since we purchased. So you can see our average price is $180. As of this recording, I think the stock price is around $460. It went up a little over 500 or close to 500. And so I was buying when it was getting close to like $90. Around 100 for a little bit. It's obviously one of those things where I wish I could have paid or bought more if I knew where it was going to go at the time, but I was also trying to be very cautious in investing in my entire portfolio, because back then also most of the other holdings were in the red as well too. Now, at the time, Meta was not paying a dividend, right? So they were not paying out a quarterly amount. We actually just got our first dividend payout here from them just a little bit ago, and I think our second payout is going to be coming out soon. So that's a really nice thing. It's kind of one of the theses, I guess you can say, that I was kind of looking for, which was paying attention to how companies like Apple for a long time were not paying out dividends, and even when they did start paying out dividends, they were still a growth company while having a dividend. So had you bought back either before or right when they started paying out a dividend, how high that yield would be at this point because of the increases that they were doing. That's one of the things I kind of think about when it comes to how I want to go about it. So when I was purchasing Meta, same thing with Google, which just recently announced their dividends, these were things that I was looking at. I was like, okay, if they don't pay a dividend now, but in the future they do, and I'm buying it at a much lower price point, my yield is going to be much higher than anybody that's buying at the time they do announce their dividends, which obviously ended up being the case for both Meta and for Google, because even with Google, I am up significantly on that, and they are now also paying a dividend. So it's a really great thing to see, what I was kind of thinking and how I was kind of going about it. I even have some old videos where I do pretty much talk about that. So that's a really nice thing. And one of the other parts I was going to be was if they did not pay out a dividend by the time I wanted to, which is going to be in about 11 years, I would just sell those companies and buy companies that were paying 3 to 4% dividends. So the really nice thing is that did end up working out in my favor. And I still have Amazon as well, that ideally in the future they will also be paying out a dividend, down the road. So if I go in here, this is going to give me a little bit more insight when I'm in my All tab here, because with the growth that I had on the actual company, that didn't include obviously the dividends that we started earning, which has now been $31.34. It's not going to change my life. It's not going to be the end all be all of what I'm trying to accomplish here, but it is the start. right? And so that's one out of the four that we're going to be getting paid throughout the year. So it's going to be a nice payout for us. It's really nice to know that companies we utilize, whether it's Facebook or Instagram, are actually paying me back for having ownership in the companies. So for me, I'm expecting and ideally looking forward to Meta actually getting to the point where they are going to be increasing their dividends for the long haul. Now, am I buying more shares of the company at this point? Not necessarily. I have been putting a few bucks here and there. Their PE ratio is relatively all right when it comes to being able to invest more into them, but definitely I have other means right now of which companies I'm going to be putting more money into. I actually made a video recently about that. If you want to check it out, those are going to be the companies that I'm investing in more so at this time. So if I look at their dividend scorecard, I guess you can say, or that's actually what it is called here on Seeking Alpha, you can see the yield is 0.11. Now that is based off of purchasing at this price point. So one thing to consider too, and this is why I mentioned it, was my yield is actually different than somebody else who's buying in today because of the price point you're paying and what you're getting paid out. And because I'm actually getting paid out based off of my price point of being $180, so almost half of what it is, actually a little less than half of what it is. So my yield is going to obviously be much higher. Now it's still relatively small, comparatively, but when you consider that their dividend payout ratio right now is under 3%, where, industry average is around 60%, and that's kind of like the good baseline to go off of. We're probably going to see it have a dividend increase for a very long time, and I wouldn't be surprised if the 5-year growth, once we get a couple of years in, that it's going to be in the double digits, which means 10, 15, maybe even close to 18% dividend increases can happen, and that's going to have a huge impact on how many shares I'm holding, because I believe it's 61 shares right now, or 67 shares, I should say. And so not having to buy any more shares if I don't want to will increase how much I'm getting paid out just because of those dividend increases. So it's really nice to see that, one, obviously just the overall gains on this holding have gone up substantially, but then now it's also paying me out a dividend, which means if I'm not selling out of this company, I'm still extracting some value, which then I can put into other companies. Obviously I could sell if I wanted to take some of those gains, and I did kind of do that a little bit on the way up, and I'm not somebody who generally does that, and I kind of didn't like that afterwards because obviously it kept going up for a long time. I think I sold around like the 250s, 280s, and it got all the way to 490 or 500, and I was like, selling is not really my expertise here. I definitely love buying more than I love selling. Obviously, I will sell if it deems necessary. If the companies I'm looking at and invested in are not doing well and their trajectories have changed and they're not going in the direction that I would like them to go, I don't want to put that money in there. I'll go ahead and sell. But companies like Meta right now, I like the way they're looking, their books, their quarters. Everything is in the place that would allow me to keep holding on even at this higher price point, while the dividends are going to allow me to take some of those earnings and reinvest them back into my overall portfolio. Because what I like to do is I don't reinvest my dividends necessarily back into the company that paid them, right? So like right now, Meta's paying me out that $30 plus. Instead of buying more into Meta, what I'll do is I'll go to my unrealized gains or look into Seeking Alpha and see which companies are performing the worst, or not the best, I guess you could even say sometimes, and I'll look at investing more into those. So like right now I have SoFi and Airbnb and even Home Depot. All three of these, which are the ones I talked about in a previous video, are the ones that I'm investing the most in my portfolio because they are not performing as well. While I still like them, I still want to hold on to them. So those dividends, whether it's from Meta, Apple, Home Depot themselves, I'll invest into these companies in particular. So that way I can get the most bang for my buck, so to speak, if I feel like that's going to be where my money best is spent. Now, let me know in your portfolio which stock is doing the best or which fund is also doing the best. I'd love to hear from you in the comments down below. And like I mentioned earlier, the resources that I utilize, whether it's Seeking Alpha, my dividend tracker, or even the platform I'm using, go ahead and check out the show notes as well too. I'll have it all in there for you. That helps support us out too, by the way, because I obviously make something out of that, and then I can go ahead and continue making more content just like this. And speaking of more content, I will post another video up right here for you if you want to keep on learning and growing when it comes to your dividends.